Hello traders and welcome to another video review. Today is Thursday, the 18th of March 2021. So let's take a look at the Forex calendar to see what is going on today. It looks like we are going to have a busy day today. Some data had been published already, like unemployment rate and employment change data from Australia. As you can see, unemployment rate is going down from 6.3% to 5.8%, so that's very good for the Australian economy. And the employment change is increasing from 29,000 to 88,000 people, and the part-time employment change is rising from 58,000 to 89,000 as well. So those was the data from Australian dollar. So we will take a look at the Australian dollar later on. During the London session, we got some data from European Union as usual, but the key event for today is of course the Bank of England interest rate decision scheduled for release at 1 o'clock p.m. So we will receive a bunch of data, interest rate decision, asset purchase facility, MPC official bank rate votes, MPC asset purchase facility votes, and monetary policy summary. As you can see, the interest rate decision, the market participants actually are not expecting any kind of a change in the interest rate decision. The interest rate should stay at the level of 0.1%. So there is no change expected. Which means any sort of hawkish comments, hawkish clues during the monetary policy summary will be very bullish for the British pound. What are the data scheduled for release during the New York session? As you can see, we got data from Canada, ADP non-farm employment change, and new housing price index. They are not that important for the markets. More important are data from US, Philadelphia Fed manufacturing index, scheduled for release 1:30, and of course unemployment claims and continuing claims scheduled for release 1:30. There is a speech from the MPC member Andy Haldane scheduled for release 1:30 as well, so that might be interesting to see what he has to say regarding the interest rate decision. And 5 o'clock p.m. the Federal Reserve Chairman Jerome Powell will give a speech as well regarding the yesterday's interest rate decision by the American Fed, of course. So let's take a look at the British pound, because there might be some sort of the volatility today. As you can see, we are still counting ABC to the downside. Those are our, this is our scenario. Those are our levels. The intraday support 1.3809. If we break it, then of course we can go as low as the wave A low, which is 1.3761. And then if the wave C will be unfolding to the downside, the target is 100% Fibonacci extension, which is 1.3538. The technical support 1.3486, and 127% of the Fibonacci extension, this is 1.3410, and 161%, eventually 1.3246. As long as the market trades above these levels, the outlook is still bullish. Why it's bullish? Because as you can see, we are trending up. We are still building the uptrend, and there is no indication that the uptrend is being terminated or the uptrend has been completed, right? Any sort of the correction that comes to the British pound market is only internal correction inside of the uptrend. So that's the outlook for the British pound. Maybe one more word about the high of the wave B. The high of the wave B is so far at 1.4017. If this level is violated, please remember that this high might go as well as here, where the technical some sort of the technical resistance is, which is of course made after the upper channel boundary. It can go as high as here. Still no problem. But so far we have labeled the wave B top here, and now we are expecting the wave C to unfold. Maybe this wave B will get a little bit more tricky, a little bit more complex and time consuming, but so far we are still waiting for the trigger that will eventually say, okay, now we are breaking above 1.4017, or we are breaking below 1.3809 to confirm or to invalidate the high of the wave B at this level. So that was the cable. Let's take a look at the euro to the British pound. It might be kind of interesting. As you can see, we are still continuing the downtrend. That's I think it's clear. We are still trending inside of this channel. As you can see, the market has been trying to break out of this channel, but all of the breaks were the false breakouts, and the market is still going lower and lower inside of this channel, trading steadily in the range, in the channel range. Okay, so we got this blue channel. This is the long-term trend line support, which is really interesting to see how the market behaves around this trend line. Sometimes it breaks below, but then we got this lower shadow, and then there is a breakout, but the breakout is being cut by the upper trend line, and then again we trade inside of the main channel. Then of course we have another breakout, false breakout, price is being capped, and as you can see, the level of 8,540 is the key technical support. I have marked this level using my blue arrow, so please pay attention to this level. Any breakout lower will directly expose the lower channel boundary and the lower levels. Of course, the target, long-term target for this downtrend is seen at 8,277. So any violation of 8,540, and then of course the orange long-term trend line, and then eventually the lower channel boundary, which is in the color of blue, will be the confirmation of this level, the 8,277, as a target for the bears. So that's the euro to the British pound. Let's take a look at the British pound to Japanese yen. Very violent pair to trade, but as you can see, we are keep going up despite the fact that the market is trending during the extremely overbought conditions, right? Let me just zoom out for you to see what is really going on. We got this main channel, the gray one, and then we started to go up even more aggressively. So this is the blue channel. The last resistance 148.89, 149.77 violated, 150 violated, and now we are heading towards 153.76. This is the target for the bulls. So it looks like we are about to get there, and we will hit this level before any meaningful technical correction will take place. So let me just expand this. I don't want to rather move it that much. I just want to expand it. Oh, there you go. So that's the channel, and this is, there you go. So we are still trending inside of the channel. No sign of any sort of trend, let's say reversal or trend termination. These two levels will now act as a technical support for the price. Those two are no longer needed. We will just leave this one for us, just in case the market will do something shocking and unexpected. The intraday technical support for the British pound to Japanese yen is located somewhere around this level, somewhere around, let's say, be more precise, this level, and that would be black line. Okay, so 150.76 is the technical support. If this level is support, we have a first confirmation the market wants to go lower towards 149.77 and 148.89. So please keep an eye on the current developments. we are still going up. We are still our still target on the British pound to Japanese yen is 153.76 before any meaningful correction. So that's everything for me. Oh no, let's just take a look at the Australian dollar. Yeah, Australian dollar. What is going on here? The Aussie tried to break above 7,823. But as you can see, well, it made a new local high. The local high was made 7,850. Okay, that's fine. So as I said, we are still building this this right arm for the shoulder, head and shoulder pattern. If there is any rally drastically above 7,850, the today's high, then this pattern will likely be invalidated because the market would go too high for this right arm to consider this pattern as a head and shoulders pattern, right? So let's just make this high noticeable, and of course we got the support. The first one is the low of the yesterday, which is 7,700. Then of course the lows of the 9th of the March, which is 7,623. And as you can see, this is the neckline. If the neckline is violated, then we will go lower. As long as the neckline is not violated, and as long as we are not going drastically up above 7,850, there are still chances for the right arm to of the head and shoulders pattern to build and then to reverse to the downside. US dollar index at the end, what is going on there? As you can see, yesterday's decision of the Fed's decision regarding the interest rate and the overall commentary didn't really help the US dollar. We are still trending higher, but this level, the top of the wave one, had been recently violated, and it looks like we can abolish and invalidate our 5-way scenario to the upside. So any close below 91.38 will invalidate the current scenario, and that would mean the top for the wave C is here, and this ABC simple correction will evolve into the complex correction, which is not really a simple thing to analyze. But we will take care of this in the next analysis. Thank you very much for watching this one, and I hope I see you guys next time, of course. Bye bye.